All right, all right, all right. Let's go. It is Friday, August 12th, another good day. You know, it's funny, and I may have mentioned this yesterday, but I got to talk about this. And you know, I've been on this thing about how these monetarists with their tunnel vision, everything in the world viewed through monetary policy, and now, you know, that's all unraveling for them. That's like they're looking at this market going up, and you know, I told you it was all about the flows, and I said this was going to happen, but the monetarists, they don't see this, okay? They are completely oblivious to this because they live in a universe where there's only one thing that matters, and that's monetary policy. And then, you know, this is driving them crazy. It's driving them nuts to see this market go up. They don't like the fact that CPI and PPI came down. Again, last Friday, a week ago, remember, they just sold the market so aggressively on that really good job number. But now I'm starting to see where they're, and I think this is a reflection of their frustration, and in a lot of cases, their anger. They're shifting their rationalization to what I'm calling pattern recognition, right? Because now I see a lot of this going on. You know, like, oh, in past bear markets, you know, the market has had these counter trend rallies. Like from in 2000 to 2002, the market rallied, you know, X percent. And then in 2007, 2008, the market rallied X percent. Or in who knows, in 1978, you know, the market rallied X percent. So now all of a sudden they've switched over to pattern recognition because their monetary theses, you know, those things are just not working out for them anymore. And they're really, really angry because they want the Fed to go hard. They want the Fed to go hard. Funny thing is that, you know, and I've been telling you guys this, the interest rate hikes, they're starting to feed through into the fiscal flows. So, which is, you know, I said this from the get-go. I said this from day one, that rate hikes are fiscal expansions. The government is a net payer of interest, and when they raise interest rates, it starts to flow through in the fiscal channel. A couple of things I want to talk about along those lines. Number one, the deficit. Now the federal deficit has topped 1 trillion. Okay, we are now up to 1.024 trillion. That is a new high for the fiscal year. It is at 4.12% of GDP. That is a new high for the fiscal year. So that entire April tax drain, which caused the deficit to drop, you know, dramatically. I mean, we went from like almost 1 trillion down to 500 billion, 521 billion. All that, the economy has been given back over 500 billion. That's the reason for the stock market rally, and that's the reason for what we're going to see in the third quarter is going to be a recovery in economic activity, a positive economic growth. And again, I keep saying this, you don't sell positive economic growth. Even if it's a slight growth of 1.2% or 1%, you don't sell growth, okay? But a lot of people, there's still a lot of bears out there. We saw this in the weekly AAII survey. You know, they've been bearish for the last 38 weeks. I mean, we still see it in the put-call ratios. We see it in put open interest for this month, actually. And now they're rolling them into September. You know, it's just fascinating to watch. It really is. So the deficit is back over 1 trillion. Now, okay, granted, that is way down from last year, and that's understandably why the economy has slowed down from a growth pace of like 10% in the fourth quarter of 2021 to, like, you know, we might hit 1.5% in the third quarter, maybe a little bit better, but it's growth nonetheless. But like I've been telling you guys, the first thing that had to happen was, the economy had to adjust to the slower or the lower level of fiscal support compared to last year in 2020 when we were getting these massive fiscal packages, because of the COVID. So that had to happen. We had that adjustment. Things stabilized. The deficit, which is net spending, that's spending minus taxes, that is adding to the financial balances of the non-government, of the economy. Over 500 billion has been added since the end of April. I mean, all these things are positive, and that's going to continue. Now, we will have in September, and I keep repeating this. Look, I tell you guys this in advance. Nobody else tells you this stuff. They're doing this stupid, nonsensical stuff like, in 2000 and 2002, the bear market rally was X%. And they're trying to say, like, because that happened in the past, it must happen again the same way now. It's not how it works. When you're talking about the stock market or the economy, that is what's called a dynamical system. There are myriads of inputs that go into what makes the economy, okay? There's expectations, there's fiscal flows, there's policies, there's all kinds of things, myriad inputs that go in. To keep yourself focused on one thing like monetary policy, or to keep yourself focused on one thing like now they're going to the charts and saying because this happened in 2000 and 2002, it's going to happen again now. This is a trap that a lot of people fall into when they deal with dynamical systems, because the thing that is tricky is that they sometimes look very similar, okay? Sometimes I've seen these guys like superimpose charts of like one era over another and saying, oh, look, it's exactly the same, but it never turns out the same. They get fooled. There was a book written, Fooled by Randomness. Randomness can sometimes look very, pattern-esque, for lack of a better term. I just came up with that, pattern-esque. But you're getting fooled. It's still randomness. So they're not taking into account so many other things to take into account now, the fiscal flows, a whole bunch of things, regulatory thing, all kinds of things. Like it looks like it's the same, but it's not the same. And the thing is, again, these are highly educated people. All right, these are not idiots. They all went to the best schools. I see who's posting up this stuff like on Twitter and elsewhere. They all went to top schools. They're highly educated, but at the same time, they're dumb. They're stupid. I mean, their brains need to compartmentalize things into singular concepts that seem to them, they want to make it axiomatic. Well, this is what I call the danger of axiomatic thinking. In other words, there's some axiom, some truth, okay? A tautology, an absolute truth that if this thing happens, then this outcome is going to happen. I mean, in markets, it doesn't work that way. Maybe in physics, things are predictable, and that's not even in quantum physics, they're not predictable. I mean, quantum physics has shown that, things in Newtonian physics that are predictable, they fall apart, when you look in the quantum world. So even that, you got to be careful. You got to be very, very careful. And to make these kind of simplistic, guys, I don't know what else to say, really. I really don't know what else to say. If you really sit back and look at it and listen to what they're saying, and these flimsy, simplistic, almost childish in a sense. I saw one headline today saying, this is the Tom Jones rally. for those of you who are old enough to remember, Tom Jones is an entertainer. He was very popular in the 1970s. He even had his own TV show here in the U.S. You know, women used to go crazy for him when he sang and danced on stage. They would throw their panties and handkerchiefs up on stage. He had a song called "It's Not Unusual." So this was the gist. I saw this on Yahoo Finance. This was the gist of the article posted. It's the Tom Jones rally. In other words, saying it's not unusual to have a bear market rally. That's right. I would say it's not unusual to have a bear market. You could make that statement, but you know, you got to qualify that. Like, is this a bear market rally? We've seen changes in conditions. Like, you just had 500 billion. They're ignoring all of the other stuff that I have mentioned, all of the other developments that have taken place. So they come up with these silly metaphors, these childish, ridiculous metaphors to now, I mean, it's getting to the point of really being silly. I mean, before, okay, fine, you're sticking with some kind of theory that you have that everything is based on monetary policy, even though you don't even have that right. You have that completely wrong in your understanding. But they stuck to some kind of a theory, and when it's not working, it's like it's the Tom Jones rally. Or, you know, the market rallied X% in the bear market in 2000 to 2002. So, yeah, that has to happen again now. No, it does not. It does not. Here's another thing that I just find fascinating, and I've been telling you guys this, that the transfer through the interest channel to the economy is very significant, in particular to the banks. I told you that because of what the Fed did, raise rates up to 2.25%, you know, on roughly $6 trillion in reserves, it has to pay like 130 billion into the banking system in interest. It's more money than it earns. And the bank, if you take into account reserve balances with Federal Reserve banks, okay, those are the big banks, that's an additional 75 billion just based on where the Fed funds rate is right now, and they're going to raise it up again in September. That's 6 billion a month of free money that the Fed is giving to the banks. And bank stocks are so freaking cheap. Like, financials are a big part of the S&P. They haven't even begun to rally yet, to reflect, or I should say they haven't even begun to reflect this massive, unprecedented fiscal flow to them, free money. 6 billion a month into the system to these Federal Reserve banks. I mean, I just saw the latest H8 release. That's the Fed releases that every Friday. That's the banking data, which I do all this stuff in my report. I break it down for my subscribers, everything. I mean, bank residual, which is basically capital, that's assets minus liabilities, took a huge jump in the latest week. Huge jump. All right? Like over 40 billion in a week. No, who's talking to you about that? It's only here. I get like a few hundred views on my channel, and you get all these nut job quacks getting tens of thousands of views for garbage. It's amazing. I'm not begging for views. I'm just saying, like, all this stuff. I mean, I don't know, man. I'm giving you diamonds here. Anyway, it's Friday, folks. Let's enjoy, all right? Go out there, chill out. We'll get to it next week. See ya. Bye.